Hey, what's going on, everybody? We are live. I'm here with my good friend Paul. Paul, what's happening, bud?
Not too much, man. Just starting the day off and going through some clients and getting some answers to, I think, common mistakes people make when they assume they have business credit. I've had a few of those this week. So,
Yeah, I have two actually. um, cool. We're gonna get into this, and here's why. There's a lot of misconceptions, right, about lending in general. But then when you get into business credit and SBA loans, typically, what the better the program, the more myths they throw around it. You know, so let's
100% true.
expose some of those.
Absolutely.
Tell your
So,
story, Paul.
so here's the thing: like a lot of businesses, they they set their business up, they get some credit cards, they pay some expenses, and they assume that they just are developing a business credit score under their business. And some of these businesses are fairly large, right? Like we're dealing with a client right now that's generating close to 13 million a year.
Mhm.
And the assumption is that because of how big they are and how much revenue they're paying through, that their sources that they use for floor plans or lines of credit or whatever are reporting a business credit score. Well, we just submitted them the other day and pulled their business credit, and guess what? Like nothing came up.
Yep.
And that happens a lot. And people go, well, I don't understand why. I've got a business credit card. I've been using Amex. I've been using Chase. I,
Mhm.
I have a line of credit with Chase Bank or US Bank or whatever. And it's like, well, it's because you probably didn't take the right steps initially to set yourself up to be able to build it.
Yeah. It's I see it more and more, right? I've had probably three or four people that are slam dunks for the SBA. Slam dunks. And out of those three or four, I think only one it's because the business credit was poor. Everyone else, it just wasn't correct.
Yep.
Okay. And what that tells me is that the SBA changed the report, and now these four people that should have been able to get anywhere from 150 to let's say $500,000, now we're going back and fixing their business credit so they can rescore and then qualify for these loans.
Yep.
And here's a couple cool things, guys. What Paul was kind of putting you guys onto some game. Doesn't matter what your revenue looks like. Business credit is something that you have to do intentionally. You have to go and make sure that all the information is right. It's all matched. It's all reporting properly. And then you're actually utilizing, applying for, obtaining, and utilizing trade lines that actually report to your business credit.
Which we touched on last week.
Mhm.
Um, the percentage of those trade lines and lenders that actually report is 7% ish, right? It kind of fluctuates a little more. I seem to be seeing some more suppliers that are going that route and paying to be able to report to the business bureaus. Because here's the thing, like business credit reporting, if you're a supplier or a lender, you have to pay those bureaus to be able to report, and then you have to report for everybody. So for a lot of them, it is kind of a nuisance in the sense to be able to do that. However, what I tell my clients is if you and all of your friends that use those services pressure them to make sure that they're reporting, chances are they'll pay that small fee to report that stuff for you so that you guys get the benefits of that. So the more you guys are educated and knowledgeable on this, the more likely you are to get more sources to report. But there's a very small amount of these sources that report. So chances are whoever you're using, especially if it's a local bank or a local mom and pop shop, they're not reporting.
Mhm. Let's talk about some things that never report. Okay, cash advances. Cash advances never report, and the only time they do report is if it's negative to put you on a list. So you're
Yep.
not building business credit. The only thing you're building is you're establishing a relationship with that underwriter or that fintech company and that
Correct.
broker. Okay. So that's one myth we'll fire right out of a cannon.
Yep. That's a good one.
Yeah. Because a lot of people are going to say that. A lot of people will say, oh, well, you're going to build your business credit doing this. No, you won't.
Yeah. Another one that's pretty common is almost every local bank that you use
Mhm.
that is considered a small local bank or a small regional bank is not going to report probably even to your personal credit either.
Yeah.
You know,
Yeah.
we find that a lot.
Yep. That's not terrible either. Like,
No, it's not a bad thing.
it's a bad thing when you need credit, but when you have credit and credit isn't reporting, that's an amazing thing.
Yep.
Okay. Here's what I mean by that, guys. Like for me, I like to invest in a lot of real estate, but that always will go on, for the most part, goes on your personal credit report, which means it gets harder to get those loans unless my income's going up or I'm paying down the loans that I have or paying them off. So if real estate investment property or properties that I'm buying are not reporting, that means that when I go to apply for a mortgage and if they don't see that, my debt to income ratio is not going to be accurate and I'll have a higher likelihood of getting a higher approval. All right.
Correct. There's a time and place for them. You know,
Yeah.
that's what I always say. And you have to be careful with them too, because if they screw something up, again, it's one of those things where they don't report until they report.
Yeah.
So just make sure everything's tight and you'll be fine with those sources. Great use of those sources though. I love your example of that, because that's exactly what real estate investors really should be doing until they can get to a point where they can do no-doc stuff, which you have to be fairly large and experienced to do that. So, yeah, that's a good source. A lot of credit cards don't report either.
No. And most of the ones that you think would don't.
Correct.
Right? So what's another myth? I see this one all the time, and this one drives me nuts. I don't know why it drives me so crazy. But the fact that people say they can get $50,000 in unsecured line of credit just off business credit alone.
Yeah.
Where did that start? Where did that circulate from?
I don't know.
That up for me,
but it started. I want to say like TikTok or Instagram was the first kind of time I saw this, where it's like, file your LLC, get your EIN, set up your Duns and Bradstreet number, go into, and they list all these banks, and they're like, they have to give you a $50K unsecured line of credit for a startup. And I'm sitting here looking at the banks. Like the first one they list on there is like Navy Fed. I'm like, well, number one, I'm like, you have to have a military background or somebody in the military to be able to get into Navy Fed. And I said, number two, Navy Fed hates business stuff. Like they don't like doing business loans. So like, why do we pulling them up and tying them to businesses? Because that's not their realm. So I don't know where that got started or why. But it seems like all those accounts that come up, they have a ton of followers and they're always getting people saying fund me. And I'm just like, man, like I wish it was that easy.
It might be a bait and switch, man. I like the more I read into that, because we work with a lot of the banks, right? Like Bank of Ozark, Chase. When we're working with these banks, like we know that's not a thing, right? Like that's never. Otherwise, they bring it up to us. Like, hey, we can do this. Can you find us people for these programs?
Correct.
I promise you, that's not a thing. And so what's probably happening, and what my thought is when people are applying or saying fund me, they're probably taking whatever the information is and positioning them to either do credit card stacking or some other type of, easy to get startup financing that it might not be as beneficial as they said it's going to be.
Yeah, that's my guess. Anytime what I've and you kind of hit the nail on the head. Anytime I've started seeing unsecured business credit, 0% business credit, 100 to 250K unsecured business credit for your business for startups, it almost always is tied to credit card stacking, which is almost always tied to your personal loan or your personal information, which is almost always going to require some form of bridge funding in order to get your utilization down, which bridge funding, as we all know, is typically a cash advance with high daily interest. And then you hope that your credit gets up high enough for you to get out of it, or you're screwed. And you're probably going to be screwed anyway with credit card stacks, because most people don't know how to manage them and get buried in debt. So
yeah, that's the truth, guys. Like, this is why we want to educate people, because if we can save a couple of people from making these mistakes, I'll give you a great story. This happened to me personally, obviously, before I got in this business. Do you remember? Did you go to college, Paul?
Yep.
Okay. So when I went to college, the big thing was they would hand out those student credit cards.
Yep.
From Citi, right? $500 limit. Well, I actually had good credit because I worked while I was in college, and I got a bunch of them. And then they had that 0% thing.
Mm-hmm.
And I vividly remember I looked at this real estate investment, and I was just so badly. That's all I want to do: real estate, real estate, real estate. So I took the cards. I took about, I want to say 10,000 or 15,000 at the time. That was a whole lot of money for me.
Mm-hmm.
Did this investment. I did it once. I pulled my money out just to make sure it was good. And then I doubled back into it using the cards again and even more.
Mm-hmm.
I remember I went away to vacation, and then I came back to check on the investment because the payoff was supposed to happen while I was away. And news broke that it was a Ponzi scheme.
Mm-hmm.
And now I was tied with that debt. I was in college. I had to pay it. And hey, that was a great learning lesson.
It is. It's frustrating though, because you and I probably experienced this quite a bit. Just doing what we do with businesses is what we see a lot are business owners that either bootstrap themselves up, so they just pay cash and reinvest their cash back into their business to a certain point, and then they don't have any credit history, so like lenders won't look at them and they wonder why.
Yes.
Or they maximize all of their personal credit cards, all that stuff to float and build their business. And then they get to a point where they're just stuck and over leveraged and they can't do anything anymore. Almost 90% of those people that are over leveraged, it's because of personal credit cards that got out of hand. They didn't know how to transfer balances or couldn't keep up with all the balance transfers to stay ahead. And they just caught up to their utilization and then they're stuck. And then, So now you've got a bunch of guys I've got one guy I'm working with right now that's got 10 different credit cards at 28+% interest. And the minimum balance on a couple of those is, $80K.
Oh, wow.
So now we got to figure out how to get this guy out of this situation. He can't qualify for an SBA loan right now because his personal score is too bad. And his, all of his utilization's jacked. We're working on his business credit and we're working on ways to free him up. So this is a case, a great case. And this is over $1 million a year business owner. So he knows how to run a business, but credit cards, if you get that many, I just think there's no way to balance them and manage them before they hit that point, right? Because you have 18 months to pay that balance off or figure out how to transfer it.
Yeah.
Or you're going to pay the piper.
Yeah. And then they retro charge that, right? So You got to be careful with that stuff, guys.
Yep.
Really. Playing with fire.
One of the other ones I really wanted to touch on too, I hear this a lot from other business credit companies that are out there, which this one is the one that kind of cracks me up, is eventually, if you build your business credit up high enough, you'll get to this thing called corporate credit. And when you get to corporate credit, which is tier 4, you will get off of all of your personal guarantees for your business, and you'll be able to finance everything through your business. Sounds great.
It sounds awesome. I've been told that too.
You won't. I'll just say that right now. You're almost always going to have a personal guarantee on something.
Yep.
So business credit's really good at buffering, right? Like I always tell people, I'm like, typically, depending on the industry you're in, and industry matters too, right? Because business credit likes expenses. So if you've got a lot of expenses, especially where your expenses lie on things like equipment and vehicles, and that equipment could be like manufacturing stuff, CNC machinery, all that kind of stuff, right? Typically speaking, we can get you off of 20 to 30% of that stuff and move that all over to your business and offset the other part of it. The other stuff that we have to personally guarantee, we can at least go through the right reporting centers so that it's not showing up on your personal credit, but you're still personal guaranteeing it. So that's a super common myth of like, no, you still have to personally guarantee a lot of this stuff to a point. But we can minimize that impact by going through the right lending sources and getting it set up and structured for you. And that's maybe something you can kind of highlight real fast is like when personal guarantees are used, what does that look like? And how do you make sure that we set that up to the right lenders so that it doesn't at least show on their personal credit unless they go derogatory or delinquent on something.
I mean, for the most part, that's not how. Repeat that question. How would I set up how it reports?
So through the lenders, when you have personal guarantees, you can do commercial loans with them. They might personally guarantee it. It's like the credit, like the business credit, like the true business credit cards that still have a personal guarantee on it. They won't show up on a debt to income statement unless you're derogatory or delinquent on there, and then they drop your personal credit score, right?
Mm-hmm.
Like there's certain lenders that you have to go through, commercial lease, like what we talked about before, lease with a dollar buyout for a business.
Yeah, of course.
That still needs a personal guarantee, but it's not going to hit your personal credit information as hard as if you went into a dealership and just bought that car with your personal.
No, correct. So all right, that makes a lot more sense. So
I was wording it wrong.
Yeah. Equipment financing and building comparable debt. That's a great example. When you go to a car dealership and you apply for financing, there's a very high likelihood that they're going to run your credit multiple times. Okay. And when they do come back, hopefully they have a guy that knows what they're doing. But if they don't, you might not get all the options, and you probably won't get, if you own a business, all the business options that you want. Mm-hmm. So when you're trying to buy a new piece of equipment or vehicle for your company, very important to get it financed the right way. Okay. And you want it financed under the business to build comparable debt. Yes, you're probably going to pay a slightly higher rate, but what offsets that higher rate is, one, the tax savings, and two, the ability that you're building business credit and building a foundational piece in your business that will allow you to go and continuously build from there. So what that looks like is this: when you have comparable debt is only is any type of loan that you take out on equipment. You made 12 monthly payments. Okay. That shows that you can handle and service that debt. And so the next time you need financing, they will usually approve you for anywhere between 1.5 and 2 times your comparable debt that's showing. All right. So that's why it matters how you do this and how you escalate and build up this foundation, which is the base of your business, because the stronger the foundation is, the higher that business can go.
Yep.
Okay. Shitty foundation, you're not building the business that strong.
And the foundation really isn't that hard to build.
No.
If you just ask the right questions and go to the right sources. And that's where I think a lot of times people make that mistake, is they just assume and go talk to a friend and say, hey, where did you get money from? Well, I went down to wherever, ABC down the street, and that's where I got my loan from. Mm-hmm. But a lot of times what they don't realize is they're stuck then with that one lending source, because that one lending source probably isn't reporting anywhere, not benefiting you. So then when you do go to buy a new piece of equipment and that dealership does pull your history, there's nothing on there. Going back to our point where when it's not beneficial to have stuff reporting, yeah. And all of a sudden they're like, oh, you don't have any history with any of this stuff. And you're like, I've got $200,000 worth of, different equipment loans and stuff that I've been paying on for 3 years. What are you talking about?
Yeah. I totally get that.
And by the way, your business credit score doesn't exist either, because none of that's been building your business credit.
Yep. Because you never set it up the first time.
And the foundation of it's really easy. I've got a step-by-step guide that I send out for a lot of first-time business owners to make sure that they get set up right, because I think that's such a critical piece of. I wish there were more courses out there on and we're working on this with the foundation workshop, which is more for some established businesses, but the lack of information, good information for a business that's just starting on. Here's steps you can take to build your business right and put the pieces in place in order to gain lending when you need it. And here's good sources of lending to use for startups. That information, just lacks out there in the internet space and in different resources like SCORE and Better Business Bureaus. There's so much misguided information from all the bankers that have been out there before that are like, yeah, just come in and do this. And you're like, no, let's actually screw you over.
Well, yeah, I think part of it too is you have these legacy systems, okay, in banking and the good old boys network, and people not understanding that aspect. And now we're starting to see technology and things get modernized a little bit. And I don't think the information, unless you're in it every day, has caught up.
Yep.
Okay. And I think that's kind of where we're at. So, to keep this on point, guys, the foundation workshop, this is going to help you guys do everything that we're talking about. Unlock the money you need, build your business credit, actually build the foundation of your business the right way so you can go up and actually grow and scale the business. And you get to hang out with some really, really incredible people, network, learn about how to increase your sales. It's going to be a great, great day. It's August 17th. Please check it out. I'll drop the link in the comments. Paul, you got anything else, brother?
I mean, look, whether you're established or you're new, business credit is going to be a key piece of that foundation, because it's not only just building your business credit up, it's also building a actual foundation for the other lending sources as well, because it's building you into a legit model for lenders to look at and get approvals. We're not cutting corners. We're not making common mistakes. We're avoiding the things that the algorithms of some of these lenders, when you submit, will red flag immediately. We're just getting you to a better spot to get better approvals, better money, better terms, and to be able to grow your business with actual leverage. So if you think your foundation's too broke, it's not. We can fix it.
Amen. All right, guys, you heard it here. Please share this, and I hope to see you guys at the workshop. Take care, guys.